Hey guys and girls, Nathan here from the B.Invested headquarters. So just wanted to hop online, have a bit of a chat, what I've been up to, talk about some things that I'm seeing out there in the marketplace, and open this for a free discussion for everyone to, talk about, ask any questions, ask me whatever is on your mind. So just as everyone's hopping online, I can start seeing everyone here. Hi guys. What have I been up to of late? I've got a few cuts on my hands and stuff like that. Just different things like that. Why have I got cuts on my hands? I just moved our B.Invested head office just the other day. Hi Matt, hope you're going well. Going awesome at this end. Hope everyone else here is going awesome as what I am. I'm feeling pumped, feeling excited. Some really awesome things are happening out there in the marketplace, and I just wanted to have a chat with everyone here. So with it, keep the questions coming through. So why do I have cuts and bruises and stuff all over myself? Now going back, not last Friday, the Friday prior, I got access to our new B.Invested head office. So with it, this is my first office that I have, purchased, and this office is here in Bella Vista, just down the road. Taking advantage of the GFD out there. As I said, there will be bargains. Whoop, here's my shirt when the GFD comes out. And the question that I have for everyone today is: are you GFD ready? Don't know if you can see that or if I was just poking my rear end at everyone, but I wanted to, just touch base as to, as I said, what I've been up to. So I'm looking here in my office. It's an absolute mess. Not last Friday before, so about 10 days ago. I got keys to the new office. Came in, stripped everything out of it. I was short on tradies, and I had to do a move. Just because of the way that my office lease and everything was expiring, and did the move, but I had to do the strip out. Couldn't get trades on the time, so I did a lot of work myself. Did the move, got walls coming in, doing the full fit out at the moment whilst we're operating inside the headquarters. So if you have been trying to call us, and you haven't been able to get through all that, apologise on that just to start off with. I was hoping to last Tuesday do a video on the interest rates. Why didn't want to do that? Because we saw the second interest rate reduction, as I mentioned a while back. However, I left the office at 6:30 a.m. from painting because I had carpet coming in at 7. So I kind of missed it because I've been too busy of late. However, some really, really awesome developments have been happening out there in the marketplace. So going back on the 4th of June, we saw the first rate reduction from the RBA. Going back on the 2nd of July, we saw the second rate reduction from the RBA. Woohoo! I was on the phone to some of my lenders today, talking to them. Some I use big banks, some I use other types of lending in that front as well. And one thing that I've realised is that on my $17 odd million worth of debt that I have across my property portfolio, each 1% reduction is like 170 grand a year that I save. So, I'm looking for opportunities. I'm looking for ways to make money out of the GFD, and I focus on markets. Going back a year ago, and I'm going to post the link after this video in the comment box here of my video series. If you haven't checked it out, 12 months ago, 18 months ago, I sounded like a crazy guy telling everyone about the GFD, keeping you guys aware of what would happen. So it might be a good time now to check in, see what's occurred, what's happening, and how you can, take advantage of these opportunities that are out there. So I did mention going back 12 months ago, 18 months ago, there is a bank that no one knows about called Deutsche Bank. Not many people know what Deutsche Bank is, but you will get to know it. And I had one of my guys on the BD Centralized Facebook page bring that back up to me because I forgot that I said it, but I did say it at a live event, that if you don't know who Deutsche Bank is, you will know who they are in the future when we start seeing the GFD. The GFD I called would be August to November last year. It occurred on the 10th of October when the yield curves dropped off a cliff. The 3-month stayed stable, and the 10-year kept dropping, and it's now at an inversion at a point which has only ever occurred when we see recessions. This time will be very different than every other time that we've had leading up until now. So what are we seeing in this current market? We saw come on the news today that 18,000 jobs. It was the #1 story on news.com. If you haven't seen it, go check it out. Deutsche Bank has axed 18,000 jobs globally. They've got an 80,000 workforce, and it has very big signs that of the things that had happened when Lehman Brothers went down, going back in the GFC. What happened? What was the occurrence of what occurred? Basically, 18,000 workers were handed a white envelope, and they got told, here's the envelope, go, leave. They had an hour to pack their desk and leave the organization. It could have been there for 5 years, 10 years. I don't know the intricate details. I don't really care. Every time I have something to say about Deutsche Bank, I still don't care, because none of it's defamation, because it's facts, what I share. And the legal team's probably too busy to even consider suing me for anything that comes up my mouth about them. So the reality of it is that if that bank falls, there is too many derivatives which are interconnected with the banking system, which will bring down the world's global banking system. And looking at it out there, it's not good signs. They've just lost 25% of their workforce today. They're trying to have a rescue plan, break the bank up. I believe that Citibank had the same sort of restructuring going back, 10 years ago. But this time, this bank is too interconnected to other global banks, banks here in Australia. When we saw the Royal Commission, we saw that ANZ had dealings with Deutsche Bank. Deutsche Bank is the ticking time bomb. So that is the linchpin. If Deutsche Bank goes down, the whole financial system will go down, and backing on that, we'll have to see massive bailouts and quantitative easing coming in the marketplace. So why are we seeing all this happening now? It's just the time that everyone gets to see it. I did say that if no one realized that between August and November of 2018 was the GFD, that when the stats come in from all the reporting of the public listed companies out there, places are going broke, you will start seeing it on their reports a little bit later. So it could be kicked down the road by 6 months, which is kind of where we're at the moment. A new reporting season coming out, which is going to, obviously have a great impact on the market. So where are we at the moment? Just going to pull some stats here. Pulling some stats from the share prices at the moment. If Deutsche Bank goes well below €6, it's currently trading 6.51 euros at the moment. It did hit under about a month ago. It hit about 5.8 euro. If it hits under 6 and stays there, the bank will go bust. It's currently 6.51. Miraculously, in the last month, it's been on a tear. It's been going up, and now we're seeing it fall off a cliff very, very sharply right at the moment. So it's still got a while to go before that. What will happen is a mark-to-market, which is basically the banks doing a margin lend in between each other. Mark-to-market will cause great havoc on all markets out there. So be prepared for volatility. Obviously, I didn't even give you a disclaimer about financial advice, but as always, I'm just sharing with you what's out there in the news, giving you my opinion. None of this is financial advice. If you need financial advice, want to protect yourself from getting screwed over from your super fund, from your banks, from your financial services out there, whatever it may be, want to learn how to protect yourself, obviously send me a message. I'll try and get back to you personally with sharing you my insights and my thoughts and being able to guide you to safety through this time. With it, 12 months ago, everyone was saying, Nathan, you're contradicting yourself. I don't see how it's going to happen. Why is the GFD exciting? Why are you being so negative? It's not in your best interest. You've got properties to sell. You've got this. I just share what's happening out there. I don't care. I'm not like these other property guys, which everyone's out there. Oh, wow, the election's gone. The election has come. Liberal got in. We're going to win. Well, no one won anything. Everyone's a free-range communist. So we're stuck in this system where we're brainwashed. We've got two options. We've got Liberal or Labor. We can vote for one or the other. But we're still going to get who controls them. That's who I want to know about. Who controls our economy, our education, the things that we're brainwashed with, our media, our food, our delivery supply chains on any equipment or food or basic utensils in life. And, you know, we've seen these things being manipulated time and time again. And we're here at a point now where I'm looking at the yield curve. The yield curve severely inverted. We've got the 3-month US Treasury yield, which is 2.18. That's if you believe CNN. I'm just going for a quick dashboard view here. And the 10-year at 2.03. But it is severely inverted. And I believe that the 10-year is less than 2%. So what does it all mean? What can you do? What are the potentials? What are the benefits? When is the next interest rate reduction? Everyone's asking me. I personally feel we're going to have a 0% interest rate. I can see all my people out there that try and copy me in the marketplace. My research saying, oh, 0%. It's actually going to head to negative target range of -2% to -3% is where I've been able to calculate this end will happen. So that's where the interest rates will stop, in my opinion. Obviously, no financial advice, but that's what I'm forecasting. And looking at the immediate future within this time next year will be at 0% interest rates. The banks, if they pass it on, they'll most likely be squeezed to pass a lot of it on. We're going to see the Fed, the US. What a lot of us don't understand is that interest rates are not just directed via what the RBA put out there, but also us having to borrow our funds from overseas. If you do recall, our 10-year Treasury bonds, it's now 10 years since the GFC. Since the GFC, we had to use bonds, which we borrowed from at whatever the yields were. They're expiring. There's a liquidity squeeze, and I feel that we're going into quantitative easing mode moving forward. When we see quantitative easing, we're going to see the price of everything rise. The price of goods rise, the price of commodities, food. If you look at the moment, eating healthy has never been so expensive. Eating healthy food. What do I mean by that? Fruit, vegetables, produce, everything's rising in value. Shit food's still crap. They're changing it. The fast food outlets are changing their recipes and the way that they actually do it. They sort of make things cheaper and affect their bottom line margins to obviously squeeze a little bit more money because it's becoming tougher and tougher to make their businesses profitable. But we're at a point where we're going to see a big influx of quantitative easing, big influx of stimulus, not just constrained to property, not constrained to anything specific. It's going to be broad range, different types of stimulus packages. I've talked about this for the last 12 months with my mentoring clients as a part of the B.Invested mentoring program. I walked them through the GFD so they could see what was happening before this all happened. And that was quite fun, working with everyone. So interest rates, I think we're going to see the next rate reduction probably. If Deutsche Bank goes under, we're going to see it immediately. We're going to see interest rates come down by large jumps. If we see Deutsche Bank stay intact, our next rate reduction will most likely be in and around September, and we could see 2 more 25 basis points removed this year. What you've got to remember, as I was saying beforehand, the US will most likely remove the interest rates down by probably 0.5% this next meeting to 1/4 to 0.5% in the coming month. So it's all going to be hedging on that. It's a very, very interesting time out there. Am I excited? I've never been so optimistic about anything as I have been recently. All the research and knowledge that I put into the marketplace, I'm seeing these opportunities just pop up, and it's so awesome. So be prepared to take action out there in the marketplace. Keep the questions coming through. Deutsche elaborate more on what happens to property when currencies die and governments change currency? So Hayden, just with your question there, what happens when the currencies die? To be honest, I've never seen a currency die in my lifetime in my native country, being here in Australia. However, if we go back and look at what other countries are doing, we've seen so many countries lose their currency of recent years. We're seeing Facebook bringing their Libra coin, their communist FBI trackable coin, digital Ponzi scheme currency, which is taking the power away from governments and putting into corporate takeover of the government, basically, if that was something to be able to pull through. From an aspect of using Facebook Coin. If we are looking at the death of the Aussie dollar, I think we've still got a long way to go before the actual dollar dies. I think we've got another full cycle, maybe another 5 to 10 years before the dollar dies. But over this course of this next cycle is where we will see the currency lose all of its remaining value that it has. Will there be a digital currency that takes over? Possibly. Will there be a US dollar to take over? Possibly. Could they rebrand the Aussie dollar as a digital token of the currency? Possibly. One thing to note is that we saw the first rate reduction in June. We saw the second rate reduction in July. We've seen our currency go off a cliff. We have seen from the 1st of July this year that it become illegal to use cash in a transaction of more than $10,000, because you that went out and earned that money, which isn't even yours, because if you want to go burn the money, it's illegal because it's not your money, it's just owned by a corporation, that you can't even burn your own money if you want. You can't do anything with it. It's not your money, but it's now illegal for you to hold that and pass it around in a note. You must use an electronic version of it. This is taking us to a cashless society, which is now, as a currency becomes cashless, it is always in the bank. You cannot have a bank run on a cashless society because the money will go from one bank to another bank to another bank. So it's always in the banking system. It's not yours, it's the bank's, and you are just an input to their ledger, which is probably where some form of a Ponzi scheme sort of cryptocurrency would come in. I love cryptocurrencies. I'm very invested in the cryptocurrencies, whether it be from Bitcoin or any of the sort of stable, I say stable, like the Genesis sort of coins that are out there, whether it be Bitcoin or Ethereum, Bitcoin Cash, Litecoin. Those decentralized platforms are awesome, but when you have a corporation adding these coins, it could be dangerous. So what I feel will happen, to answer your question, Hayden, is when the currency dies. Imagine if everyone's on a 50 grand a year salary right now, and average wage is 50 grand, and then the average wage goes to from 50 grand to $1 million. And the reason why I like property is that debt becomes irrelevant with inflation. As the dollar dies, it's easy to pay off your deadbeat property loans with it. So my view is that if someone's on 50 grand a year now, and suddenly they're on $1 million a year, and with that $1 million a year, a Big Mac meal might cost $200 instead of $10. Basically, if their rent is $300,000 a year, in a rental perspective, the dollar dies, the ability of what you can buy will buy you less, and you can pay off your loans much quicker and much easier by using that worthless fiat trash that we have, fiat currency, which is the dollars that we use now, that we're forced to use. So will it happen overnight? No, it will not. But all of these triggers are slowly getting us closer to get to desired result. If you can see it before it happens, you can make decisions and actions which are obviously going to benefit your position moving through this time. So it's really, really exciting. Matt, how long till the Deutsche Bank collapse? Can they be propped up too big to fail? If they go down with at least 50 trillion plus in derivatives, it will be carnage. World will grind to a halt, a massive depression, question mark. I called it the global financial depression. If you look it up on Google, I think that the only things there for GFD in finance is myself talking about this. I believe that we've already gone through a recession. No one's brave enough to talk about it. The TV and the media don't want to hear about the stuff that I say about this because it will scare off the advertisers. Who funds the media? The advertisers. Who is the advertisers? The corporations. Who controls the thoughts and everything that we all believe? It is the corporations. So no one wants to hear this stuff. But if Deutsche Bank went bust, I believe we would see a full-blown depression. It is not possible to save. We quite possibly, we've seen back in 2008, 2009, some dodgy banks go under. We've seen in 2008, 2009, some dodgy corporations go under. And here we are in 2018, 2019, we're seeing the death of currencies and the death of bankrupts of countries. Countries are going bankrupt this time. Currencies are dying. And, that's what's going to happen. Maybe it'll push everyone to the US dollar. Maybe the International Monetary Fund, the IMF, will come out and bail out the central banks and do something like a special drawing right, which personally, I think that the Libra coin, the Facebook Libra coin that could be coming out, could be some form of hybrid SDR, special drawing right, to be able to manipulate the parameters of the financial system, to be able to prop it up on that front. Wow, a lot of people on board in the Facebook Live tonight. Keep the questions coming through. Hayden, so do you bank cash or pay down property or continue to buy more to try and hedge against hyperinflation? Now, I don't think we're going to be in hyperinflation this year. I've talked about hyperinflation for probably 2 years. When I first talked about it, I was laughed at. Now I talk about it. It's just general conversation between everyone here in the community. For me, I don't like money. I never have. As soon as I've been able to sign a contract, I noticed a video went to Facebook just beforehand and to YouTube and whatnot about me talking about money and pulling out savings records from when I was a kid. I used to save up money because interest rates were strong. Interest rates where they are now, it is really, really bad. Savers are the ones who can get themselves into trouble. People that are too over leveraged and the people that are too under leveraged will be the ones in trouble. The ones that have good supply of assets, the ones with ability to obtain funds, access to liquidity, and a good solid plan will be able to take advantage of this situation that's out there. So for me personally, I don't like having access to cash. I've got, my portfolio, my investments, my businesses, my properties, they're all structured in certain different ways to obviously hedge against certain different markets, different things that occur at different times. As for what one should do, it depends on your position in life in general. This is where my disclaimer comes on. I should have the "I'm not your financial advisor" t-shirt on today. However, it's too good of an opportunity not to have my GFD shirt on. But with it, I think it's important to have a plan. Be aware of this. Understand that these things aren't just crazy people talking about what could happen in a financial calamity. We are here right now. For me personally, I'm trying to take every chip off the chessboard. I want to be able to accumulate as much assets as I can through the GFD. And I think that should be everyone's sort of goal, to be able to minimize their risk every step along the way, as well as being able to buy and collect as many cheap assets as they can. Because at the moment, any asset, whether we're talking about property or whatnot, the stock market is overvalued. Personal opinion, not financial advice. I own 0 paper assets. That is my basis upon it. I believe it's overinflated, and we could see some carnage on that over the coming months. Don't go and sell your shares. Don't go buy shares. Don't believe anything that I have to say on that front. It's my personal opinion. Do as you please. For me, I'm trying to pick up as many fixed sort of assets, whether that be property, whether that be crypto assets, whether that be businesses or certain buildings or certain things that I can do, this is a time to be improving your position and doubling down on what's out there in the marketplace. So when hyperinflation comes, those assets, those things drawing cash flow, the cash flow will be inflated as well during this process. Jacob, hi Nathan, could you or one of the team please get in contact with me to discuss asset protection? Jacob, if you could just possibly just send me a private message regarding asset protection, and I'll personally make sure that one of my team get in contact with you tomorrow on that front. Wayne, Nathan, I love the stuff that you bring out. Seriously, you're a legend. Thank you. As I was saying to everyone on here beforehand, I've just moved office. I'm very, very tired, very drained. There was one period there where I had 4 days with less than 8 hours sleep over 4 days. I painted this office. I knocked down every single wall in it because I had to get my team here with the minimal business disruption possible. And I just took out a really cool asset. We can't see it at the moment. If I was to turn my camera around, which I might do anyway, just for the laugh, you would see in the reflection, one of my guys have left their bottle here and a whole pile of nuts and bolts and screws and stuff. But outside that window there is a nice watery lake. I've got views over the local district here in Bella Vista. The office is an absolute shamble with no walls and stuff like that. But I came back in the office because I wanted to get this out because I felt very bad that I didn't get to communicate with you guys when the RBA dropped its interest rates last week to historic lows at 1%, and we will head to negative. I'm very confident of that. Glenn, how long until the Dow Jones crashes? I don't have that answer. How long is it going to be manipulated for? That's probably the greater question to ask. It's inevitable that it will crash. If we see something like Deutsche Bank, they just took out 25% of their workforce today. They gave them little envelopes, told them, pack your desk, you've got an hour, get your shit, get out of the office. We're in a full-blown recession, heading into a depression. No one realizes it. No one's got the balls to talk about it. Everyone is going to be scared. Everyone's going to be like, oh, what just happened to me? Poor me. Fucking something's just wiped us out. It's someone else's fault. Whatever the case is, but you can plan, you can prepare, you can take advantage, you can put yourself in a position to, change the direction of your life in this sort of market. So I quit my job 10 years ago in the GFC. And yeah, that's what I see out there. But in short, to answer, I personally think we should have seen the Dow Jones collapse on the 10th of October 2018 when the GFD officially started. And it hasn't. It went down. The Dow Jones went down all the way from 26,000 at the start of last year to about 20,800 or 21,000 just before Christmas, and then went on to record highs this year. It fell off a cliff slowly from the 10th of October all the way down, and then went back up, and now is plateauing with lots of volatility. When it pops, is going to be absolute destruction out there, given the fact that market, which is like a margin call, will occur, and it will just totally, you're going to see bank holidays, you're going to see banks freezing funds and assets, and shit won't go around in the economy out there. So, but when they do come back online, everyone's going to be like, oh wow, we saved the day, like we did back in 2008, 2009, not realizing that we're going to prepare ourselves for the biggest boom of everything. I'm not talking about property. When I talk about booms, when I talk about bubbles, it's not about property, it's not about Bitcoin, it's not about crypto, it's not about stock markets. Think about it. 10 years ago, we were sitting here. If you saw someone driving a car, like look out on the road. My old office didn't overlook a lake. It overlooked the Windsor Road. And I used to just sit there and watch cars. I'd watch the cops trying to do radar and screw people on their phones and stuff every day, trying to get revenue for the state, the corporation that owns us. But I used to look out there and I thought to myself, everyone's car is less than 10 years old. If you have a car that's more than 10 years old, you're a poor bastard, something's wrong with you, whatever the case. But if we think back 10 years ago, how, like a car that's 10 years old 10 years ago, that would be considered a new car. 10 years ago, it's okay to drive a car from the 80s. You could drive a Bluebird, you could drive a 80s Corolla, a Daihatsu Charade, a Datsun, a Kingswood, whatever the case may be. But now you never see them. Why? Because everyone's mortgaged up with a car loan. Ask everyone. Everyone's got a car loan. They create bubbles out of different types of financial instruments. They're doing it with food. They're doing it with enslaving people to the Industrial Revolution back in the day. And yeah, it's just an interesting time and a good opportunity to be able to take advantage of the market. Robert, what percentage rise do you see in the Sydney property market for the next 12 months? Don't have the answer for that. It's going to be awesome when it comes. We've seen interest rates go down 0.5% to record lows. However, that's not enough. That's not going to get the market back up. Every real estate agent out there said, oh, things are better. Things are so much greater because, you know, Liberal one, as I was saying before. Things are going to be great because we've got positive news. Things are going to be great. Well, if things are so great, why didn't we increase interest rates going back 5 years ago? If things are so great, why have we dropped our interest rates down to 1% and they're going to go lower? If things are so great, why haven't we seen a recovery yet? I personally think that we're going to have to see a lot more stimulus. I think we're at the bottom, as I said in my last YouTube video when I did the video in Queensland, or Facebook Live, sorry, when I was in Queensland, that was the, I feel like we're at the bottom. The important part is if you're building a portfolio, take advantage of this time while finance is difficult, because when it becomes easy, everyone is going to be wanting to buy property, and it's going to be a hell of a lot harder. Price is going to be rising. You know, wouldn't you want to be picking up properties whilst they're on sale, picking up assets whilst they're on sale? I talked badly about the stock market today on the video. I don't own any paper assets at this point in time. Now, I used to trade during the GFC. I used to day trade, you know, paper assets. I will be buying and holding certain paper assets after the GFD, but at this point, I believe that they're too overpriced. But Sydney property, yeah, as to give it a percentage point, I'd be just making up things by telling you that, and I don't do that stuff. I do believe that we're going to see some very good, solid growth once stimulus comes in. We're going to see money that's being printed from the RBA. We're going to see the government giving away free incentives. We're going to see the state give away free incentives. We're going to see different sorts of schemes that come up. Funny enough, they've just rushed through everyone's $1,000 tax deduction for you. I think we'll probably see something. Last time we saw pink bats, this time we might see solar. There's something along those lines come in. And when we see more and more of these infrastructure projects and stuff, that's when we know that there's a lot of money coming into the system. And Australia's in a good position. We're well placed. We will fare well out of this. A good thing for us to understand in this market as well is that when we see for exports for a nation like us at the moment, people can buy our goods. For imports, it isn't good. So if we have commodities and shit in our ground, it would make it more profitable for us to start a mining boom. So we could possibly see a mining boom occur. Do not go out and buy mining properties or properties in mining towns because I've said that, but commodity prices could rise and it could become profitable for that to happen. I don't speculate in those markets. I buy the occasional properties when people are absolutely on their knees and prices have dropped by like 80%. That's the only time I go into those sort of markets, but there could be a potential for that. Ziggy, g'day Nathan, love the videos, mate. Love having you on board. Thanks for watching and tuning in. Another one from you. If you're starting all over again at 18-year-old, what would you do? Good question. If I was starting over again as an 18-year-old, I probably wouldn't change too much because I'm happy with the position of what I've been able to do. Maybe some of the decisions, if I had a time machine, I probably would have spent $1,000 on Bitcoin 10 years ago. And what would I do if I was starting out today? If I was a normal person that wasn't, with a portfolio and all the knowledge and whatnot I was starting today, start researching, start by having a plan, and working out, the knowledge will be like, okay, what do I need? What's going to happen? How can I take advantage of the market that's there and all that sort of stuff? I would be out there buying and hustling as hard as I could. I never had Uber to earn a third income when I was working in a job. I didn't have certain things that people have access to today. So I'd probably be hustling as hard as I could for a set period of time. And after I do that hustle, I'll take that money, put in the assets, being property, crypto, those sorts of things, and be able to build my portfolio. You can still buy properties in 2019. Sydney, you can still pick up properties for $250, $260 in some places. You can still buy properties in Brisbane for $150,000, rent for like $280 a week, $270 a week. Deals are still out there to do. So I'd build a portfolio very similar to what I did. I wouldn't change much of my property investing point of view. Matthew, do you predict the property market going up or down over the next 24 months? I just answered that a little while ago. I predict that the property market is at the bottom, and we will see it go sideways, slightly upwards, with a little bit of volatility, but not like that. But I do predict that we will see the property market go upwards, but it just comes when we go way negative in our interest rate cycle. We need to allow liquidity comes back into the marketplace. There's two triggers which will be the real big thing for property. The first one is interest rates going down. The second one is being able to get access to funds. So when APRA takes their foot off the brake, we will see more liquidity coming in the property market for property to go up. And that's the only way. That's a form of stimulus. That was a form of controlling the market. That's going to be a control of pushing the market forward. Chris, when do you suggest to hit the go button on buying more property? Now is the time. I've bought quite a few properties of recent times in some unorthodox sort of ways, as far as the structuring of the deal and how the deal's structured, delayed settlements and stuff like that. But now is the time to be buying. Once the property prices go up, it's too late. If you want to build a portfolio, if you want to just buy one property, well, where's the bottom? I think we're at the bottom. If you want to build a portfolio of 5, 10, 15, 20 properties to make yourself financially free, well, you've got to start running, because we're at the bottom of the market and it's not always going to be here. So, Ahmed, hi Nathan, property versus good cryptocurrency. Where do you want to put your money in the current near future environment? Fortunate enough for me, I do own a lot of crypto assets. So I'm not buying crypto at the moment. Picked up stuff in the dips and whatnot over the course of the last 12 months. But I had a big crypto holding prior to the last bull cycle. So for me, I'm just sitting pretty. I look at crypto as a bit of a hedge against other volatility in the marketplace. Here's one point for you guys. If you're looking at cryptocurrency, everyone's like, oh, crypto scam, whatever. If you had one Bitcoin, and let's say it's a 10 grand US, and the Aussie dollar is $1.40 to the $10 to $1 US, that means your Bitcoin would be worth 10 grand in US dollars, or 14,000 today. If Bitcoin still stays at $10,000, but the Aussie dollar collapses to 50 cents, then your Bitcoin would be worth $20,000. But in US dollars, which is the base currency, it would be worth $10,000 still. You could use crypto as a hedge, no financial advice, but I look at crypto a little bit different than most people when it comes to going to the moon and buying Lambos and all that sort of stuff. Dan, when hyperinflation occurs, is it likely that we'll see mortgage rates for property loans rise significantly? And could this be an issue for property investors who might not be able to make repayments due to high rising quicker than rents? Yes, I did have this conversation with someone today. I think that we could see, as hyperinflation occurs, that we could see a lot of, I think we could see interest rates go up quite large, like 10, 20, 30% interest rates, But that ain't going to happen until our dollar dies. When they go up by 20%, 30% interest rates, we're going to see, Big Mac meals $1,000. Our dollar's going to be worthless. Average wage $1 million a week, that sort of stuff. So there's just my 2 cents on that front. I plan on paying up my portfolio before that occurs. Ziggy, I currently have 25 grand savings, short of deposits. What would you recommend on a first investment? What would you recommend? Sweet spot. What sort of deposit? 25 grand, you could still probably buy something. If you structure it correctly, find a place where you've got 25 grand, you possibly buy in a capital city, 6-month delayed settlement, maybe get something at 150 whilst it's on sale. If you have any questions on that front, that's using a 20% deposit. If you use a 10% deposit, which, obviously no financial advice, I'm not here to give advice on that front. My loan book, I have a mortgage company, it's in the finance as well, which I've run for about 10 years now. With that company, probably 99% of our loans are 20% deposits, but I do have the special occasions where people use lower than their 20% deposit. So there is an option as well. If you have any questions, feel free to send me a PM as well. Well, hey, can I please have a shout out to the team? Can I please have a shout out to the team? Luce, Asol, Tash, Marbles, Mafos, Kin. Shout out to everyone. Thanks for tuning in, guys. Rochelle, thanks for sharing your wisdom. Thank you for tuning in and having me as a part of your evening at home. Will, I was just thinking about this the other day. Can I please have a shout out? Oh, same question. Luke, legend stuff, bro. Nice. Perth property, good investment or bad? From Josh. I do realise that my battery, I don't even have PowerPoints here in my office at the moment because, as I said beforehand, just moved the B.Invested headquarters. That's why I've been a bit quiet lately. It's a bit of a work site here at the moment, so my battery's at 6%, so I can't go through all these, but I will try my best until we get down to 0%. Perth property, good, bad investment. I don't own in Perth. There is good potential out there if the numbers stack up and it's cheap, potentially. I know it's still in a bit of a bear market over in Perth and Western Australia. Especially, it'll be important to keep an eye on commodity prices and what's happening in the mining sectors, because I think the Perth market is a very volatile market due to the mining markets. Ziggy, again, which areas would you invest in the current market or in the next 12 months? I think I'm a big fan of, I don't think I am a big fan of Eastern Seaboard property. So Sydney, Brisbane, Gold Coast. People always ask me about Melbourne. I'd rather be buying in Sydney than Melbourne, but Melbourne's still a better option. Personally, if you ask my opinion, I'd rather invest in Melbourne than in Perth. That's where I work. How do you work out how much cash to hold, say as a percentage for your property portfolio? Do you tend to invest in interest only? Do you tend to do interest only or principal and interest? I try and keep as minimal amount of cash as possible, but I have many different buffers. So I look at crypto as a buffer. I have precious metals as a buffer. I have cash flow coming in from my rentals, which is a buffer. So I have many different streams of income and whatnot. Do I tend to do interest only? I always set my loans to interest only to start off with because it's better for your cash flow. And then I turn it to principal and interest when it rolls over to principal and interest. So probably about, I always have my haters that come out and go, oh, when your loans turn to principal and interest, you're going to be up shit creek and you're going to go broke. Well, here's the answer for my haters out there. Probably about 75 to 80% of my loans are principal and interest. So all my haters are going to say that I'm going to go broke when I turn principal and interest. There you go. But yeah, hopefully that answers your question, Luke. Try to make it as comical as possible. Hayden, I put my broker onto a property for 232, rent worth 270. Deals are out there in this market. It's just a matter of hustling for them. Cheers, Nathan. Thanks for insight. Thanks for tuning in. Ian, thanks for the insight. Thanks for tuning in. Anthony, what would you do with your money sitting in an offset? Personally, I like to make my money work whilst I sleep. I always try and get a better use out of it. If someone was to give me money at 10% interest rate, I would make more than 10% return on that money. So for me, putting money into an offset, I don't want it there. I don't have offsets like that. I have different sort of facilities and different ways where I put my cash. But for me personally, I'll be putting it into other properties rather than letting it sit there, because especially looking at the banks, what they've been doing over the last 12, 24, 36 months, is that they've been closing down facilities that are inactive. So Tim, will units grow in Canberra? Not a big fan of Canberra. It's very political. Not that I've got a lot of mates. I've got so many mates that are from Canberra. However, it's very swings. Who's going to get in? That would be a market. Is it Liberal? Is it Labor? Labor, generally prices go up a lot more in Canberra. I hear that the market's going all right over there. There's still a great deal of demand. Not a market that I'm actively in or buying, but I do believe we'll still see growth. I don't see any reason why we're going to see volatility in Canberra per se. All the prices fall down. Dennis, what altcoins will boom this year? Good question. For those of you that aren't into cryptocurrency, altcoins are different types of Bitcoin, just for the simple example of that. I don't like to speculate and throw out there. Still a very big fan of EOS, and still holding all my major holdings, which being Litecoin, Neo. I like to invest in protocols, and yeah, basically Genesis sort of coins, monetary sort of coins, as well as protocols like EOS, Ethereum, Neo, Cardano. Not so much Ontology. Yeah, so I'm not a big speculator of, I've heard this cool new thing that's going to come out, it's going to be the next Bitcoin. Currently offsetting a majority of my principal place of residence. If you've got a lot of money in your offset, it's getting back to that question before about the offset. If you've got a lot of your money that's enough to offset the principal place of residence, you could possibly be doing a lot more with that money. Yeah, you're trying to save, 5%, 4%, 3%, 5%, let's say. I could see a greater return than 5% on my money. So yeah. What suburbs in Brisbane should I be looking at? Basically, any area that doesn't flood and any area that's on sale, you're getting below market value with good upside and good cash flow. So I've been buying in all different areas of these markets. Yeah, so that's my. If you have any questions on it, feel free to hit me up on the personal message, and I'll try and get back to you this evening. What about land like decent size of 40 hectares? I'm in the process of picking up 100 acres at the moment. Just depends. What are you going to do with the land? What is the land going to earn for you? Is it going to be an income producing? Is it a lifestyle property? If things were going to go up so great, they would have done it by now. If you're buying something, land's actually becoming expensive for certain sort of produce sort of blocks, because obviously produce is going to go up in value. Michael, good to see you, Michael. Miss you. How's Mount Druitt Heights going out there for you? Ian, what are your thoughts on the Wollongong market? Wollongong market, I look at the Wollongong market as the outer Sydney, very similar sort of demographics and parameters as the Central Coast, Newcastle sort of region. The market's still holding up quite well considering what happened in the Sydney market, but the slowdown generally takes a little while longer, and I'm starting to see some cracks in that market, as I have done on the Central Coast. Like on the Central Coast, I just picked up some properties for $260 for some properties, and some houses for low 300s. So opportunities are showing their heads in those sort of areas. Glenn, how long do you keep your interest only loans for? 5 years, whatever they're set up for. When I get the loan, generally 3 or 5 years, the longer the better. Yeah. Jesse, Nathan, you told us a few years ago that you have around 200 properties. Give us an update on the total now. My property portfolio has moved. It's been pretty stable the last few years. I had sold off a few properties. I've bought back a few properties. I'm still sitting around the 200. The better question to be asking is, how is my net worth position and what am I doing with those properties now, is the far greater thing. So just the last 12 months alone, I've picked up about 10 more properties. Those properties have been some more interesting sort of assets. As I said, office here, just picked up an office on specific sort of terms, picked up a couple of other potential development sites in the future, which is really cool. Dennis, what are you going to do to prepare for the GFD? I've been preparing by increasing cash flow over the course of the last 24 months, lowering my debts, removing some areas of risk and minimizing of risk in overall my whole portfolio, my whole position, and putting better use to some of my assets. So for example, I'm just about to start, now that I've done this move, I've got one more move of an office to a site which I'm purchasing once again, and then I will be doing the massive Big Daddy renovation to a massive commercial site, which will be, it could be $1 million sort of reno that I'm doing on a property. So that will bring me some sweet cash flow on that. What's the best platform to buy crypto? There's so many platforms out there. I either mine my own coins or I buy through, I just go through a gateway such as CoinSpot. No, it's not the best, but there's lots of other ones out there as well. Would like to know your opinion. Is it worth taking advantage of the first home in a grant to get in the Sydney market before looking at more affordable locations like Brisbane? Alex, how long's a piece of string? I need to know more about your personal situation. If you'd like, send us a private message. I'll have a look at your position, so maybe give me a bit of a background on your position, and I'll get back to you on that front. So feel free to send me a message. Tim, cool shades. Thanks, mate. Anthony Legend, thanks for your thoughts. Dan, when Deutsche Bank goes down, could that cause any of the big four to be bought down with all the derivatives? I believe if Deutsche Bank goes down, it will bring down some of the larger banks. Besides it bringing down the big four, having some sort of effect, I think that the access, the risk to the big four, they're sitting pretty in comparison of world sort of standards of banking. However, what we need to look at is the back end sort of deals. So I don't know. I don't have the exposure to the back end of the banks and what their deals are with other sort of institutes. So, for example, if Deutsche Bank lends to, and this is just a hypothetical scenario, but if there's some sort of financial product between the back of Citibank and Deutsche Bank, and ANZ has invested in Citibank, for example, and Citibank blows up because of Deutsche Bank, there could be collateral damage from that perspective. So, and that's just a hypothetical scenario, not that I know anything about that. But, and I mean that not as I mean that was just a scenario that I made up. But if there was a third-party risk that was created there, it could have a flow-on effect. But besides that, I think that the Australian banking system is relatively sound, but we could end into some liquidity issues, which will be propped up by stimulating the economy, by printing more money, which will cause the next boom. We are on the phase of a boom rather than a negative. I called the negative before the negative occurred. And I'm saying that the next upside, it isn't, because we've got a property clock or anything like that. It is simple supply and demand of liquidity in the system that we're working with. And we've got some big time bomb land miners that are about to go off. If they're treaded on incorrectly, people will lose limbs financially. Brian, Nathan, townhouse unit, house, land, whatever is cash flow positive, cap growth as a beginner. Brian, don't have an answer for that one because I need to know some more information. Flick me a message and I'll get back to you personally as to what could be better in your position. But everyone's position is different. As building a portfolio, one of the coolest things that I've done over the course of the last decade of building B.Invested is being able to see people build profitable portfolios. So from that perspective, you could need cash flow, you may need equity, you may need capital. Without knowing the parameters, it'd be foolish of me to speculate and give you that feedback. Ria, hi from Mountie County. Big shout out to 2770 guys. Rochelle, great insight, thank you. Rochelle, what about buying gold? Buying gold, I invest into precious metals, i.e. gold and silver. I have done for a long time. I don't go out there and ever buy a massive amount of precious metal. It's an accumulation which occurs on a regular basis. Could be monthly, could be quarterly, could be weekly. There's been different times where I've had excess cash flow, and I've just put it in there as a sort of for savings and as a bit of a hedge against my position. I don't like it all that much due to the fact that it doesn't bring in cash flow and is more controlled via paper contracts. My battery's about to die shortly on my laptop, so I've got a couple more questions to go through, so I'll try and answer some more of them, but I will end the video before my battery dies, just so this is saved for everyone. Vince, hey mate, just joined the cast. Not sure if it's been asked, but what do you envisage will happen to the property market should the lenders reduce their assessment rate 7% as APRA suggested last month? We will see APRA reduce their 7% buffer. That'll have to go. That will have to go to stimulate the economy to see the market recover. So that will be one of the stimulation measures that we will see. So keep an eye out for that. We're seeing APRA reduce their lending criteria. We're seeing interest rates going down. We're seeing other sort of financial measures going to the marketplace. This is just to keep the market up, right? So there's been a big fracture in the marketplace. We're seeing all these things come in to try and hold it up. What about to push it back to where it needs to be? We're going to need to see so much more stimulus come into the marketplace via interest rate reductions, so on and so forth. So I think we will see that. I think we'll probably see that by the year's close. So Luke, what is the update on the dream home? Good question. I started doing landscaping of the property, and then I realized that when I look at my backyard that I have development approaching very quickly. I could fit 40 blocks on that one property, and it's in Sydney. 40 blocks with an average retail price of 500 grand. That's just being very conservative, and that's $20 million just for the land value. Going back it took me 3.5 years to get my DA approved, and then that was in the point when I realized that we're heading into a GFD. I was trying to settle $10 million worth of property, couldn't get the loans for it. And I was like, do I build my house and have problems here, or do I settle my properties? I settled my properties, and after I did that, I realized, shit, maybe my ego should die, and that big baller house of 2,200 square meters is probably a little bit too big. I have invested probably about 150 grand into getting that DA approved, but at the moment I'm in the process of putting a few different businesses and different things on there. So I'm in the process of getting like an organic food shop that I'm going to put on and build out the front, and a farm, and some other business ventures that I'm into. So I didn't live there anymore. I lived there for 5 years. I may go back and build that in the future, but at this point in time, I'd rather just go buy the dream home and not go through all the headaches now that I've changed my position. Jesse, are you still on track for being a billionaire by the age of 40? Well, my computer looks like it's sort of dying. I still am on track for being a billionaire. Billionaire comes in all different facets, whether it's a billionaire in dollar value or billionaire in the value of being able to impact on so many lives. Visions have changed from that. But I do believe that I am well on track to be a billionaire by the age of 40. I've still got 6.5 years to go. till I'm 40, 6 years, 6.5, till I'm 40, and in my 40s. So yeah, on that front, I'm very, very comfortable with my position. If I can pull off a few more of those sort of deals of doing major developments, that would be awesome as well. It appears to me that my my laptop is about to die, so I will leave this video right now and just throw it over to you guys. If you have any questions, please send me a DM, like a personal message. I will check it. I will reply to it. My team will check it, and we'll go from there. Laptop looks like it's died. If it hasn't, thanks for watching. We'll catch up soon. Have a great day. Bye for now.